Hey there, welcome to Startup Steroid. Today I'm talking with Brad Chisholm. He's an angel investor and he is also the founder of Launch Factory. And with Launch Factory, he's doing something really unique. We all know the standard angel investing model where we are essentially, a founder starts a company in his basement or in his garage, grows it to a point where he needs additional capital to take it to the next level. And then, eventually an angel investor steps in and helps him grow the company. Brad is doing something very different and is really turning that model upside down with Launch Factory. And that's the story we're exploring today. So, this is a really interesting concept, and I'm really looking forward to this conversation. Um, Having said that, couple of housekeeping details. If you are an investor and would like to join our network, please send me an email. My email address is on screen. It'll be on screen at the end of the interview also, and it's also in the description. So just send us an email. We'll get in touch with you and we'll get you connected to our network. If you are a startup founder and are looking for capital investment, go to our website. Our website is startupsteroid.com. Click on the founder link and fill out the form there. And again, you can become part of the network. And if you're just interested in this kind of content going forward, just make sure you click the subscribe button. And we come out with shows every single day. Monday, Tuesday, Wednesday, and Thursday, we come out with a startup story and a deep dive call. And on Fridays, we talk to an angel investor like Brad and explore their background and what they are actually looking for in companies. So that's our schedule. And if you're interested in that contact, make sure you click that subscribe button. And having said all of that, let's get into the call. Hey, Brad, thank you so much for coming on and participating in this initiative. I'm really looking forward to this conversation because you have a really unique style of investing. And that's a style that we really want to explore and see if we can learn from you and learn from your way of doing things. So welcome aboard.
Well, thanks for having me.
Yeah, absolutely. So I know you are an entrepreneur at heart. You've started your own company. You sold it a few years ago, but help me fill in some of those blanks. Tell me a little bit about your background.
So I started off with undergrad in engineering and math. So very much on the technical side, began my career in the semiconductor world, which was, at the time, which was amazing, right? It was, it was a lot of fun. I started working for ST Microelectronics in Dallas as an
Mm,
intern student. And then when I was graduating, I had an opportunity to take a position at ST in San Diego. And I thought, you know what? Never really lived anywhere outside of Texas. This is a good chance for me to try something new. And so, you know, figured to give San Diego a try. Never intended to stay in here, but once you go San Diego, it's hard to go anywhere else. So came out to San Diego, worked for ST, great learning experience, but they ended up shutting down the fab pretty quickly after I got out here. So this would have been around, early 2000s. They shut down that fab, and there's a job opportunity basically doing the same thing I was doing, but only in the R&D side for the Navy. So
mm.
now I switched from manufacturing to research and development, still in the semiconductor industry. And this was one of these jobs that it sounded really cool, right? So I'm working in this underground bunker. Literally, they built a fab in an under. It was an old cannon battery in the side of the hill in Point Loma. So it's this underground building. You drive to work on the point. So you have the bay on one side, the ocean on the other side, and it's just this, it's amazing, right? So
Wow. Yeah.
yeah, and when you're doing R&D, it's a much different pace and it's a little bit more cerebral and a lot less hurry. It was, and there's part of me that loved that, and there was a part of me that just couldn't. I need to move fast, but I learned a lot there. One of the things that I got to participate on is this one project for MEMS based inertial sensor. And this project really interested me. And so, and this was right around the time that I was discovering that I was really a closet entrepreneur. That maybe I want to do the business side rather than the technology side. So I had started taking at the time started taking business classes, working towards an MBA at SDSU, and I spoke to Richard Waters, who was the inventor of this inertial sensors technology, and it turns out he had been having entrepreneurial ambitions himself, specifically to license this technology and then take it out of the Navy. So he and I decided it'd be a good idea if to partner up on this. We used my MBA program as the incubator, for this. So every class, business plan writing class, marketing class, we use this technology as a subject matter. And
Right.
it was wonderful. The faculty there was very supportive of all of this. We concluded, or I concluded, the MBA program with business plan competitions, which is, you can think, if you're not familiar with those, it's basically the same as pitching to investors.
Hmm.
Only it's an academic exercise, but it's a very serious academic exercise. It
Right.
was I mean, I ended up taking in, it was on the order of, I think just my half was about $40,000 in prize money that you win from these competitions.
Oh,
And
wow.
it's even bigger now. And one of the ones that we won, that one of the prizes was you got to go to New York City and ring the opening bell of the NASDAQ Stock Exchange.
Wow.
Yeah, so
That's incredible.
this was what starting a company was like for me, right? Like you get all this instant cash and you get to go ring bells, and
Wow.
it's gonna be easy, right? Uh, so it wasn't easy, so this was the birth of Lumidyne Technology. So we come out, just hitting the ground running with with all this business plan competition success and everything else, and so we thought, okay, well now we're gonna go raise investor dollars. And I went to at least a dozen different angel forums across the country.
Right.
And this, paying for this out of my prize money that I got from the business plan competitions.
Right.
But it's one of these things that so I pitched, we went in thinking that we've practiced this pitch. It's clearly has been vetted by these judges. We'll do really well, right? We raised exactly $0 from each one of these angel investor forums. People would say, well, they liked my slides and they liked the story, but we didn't get any checks. And it took me a while to figure out why.
Mm.
But then because if you look at it, this was in 2007 and 2008. We had an inertial sensor technology. So the first variety we were going to make is accelerometers. There were
Right.
no accelerometers in cell phones at that time. So nobody had heard of an accelerometer.
Right.
Our first target market was called seismic imaging for the oil and gas industry, and nobody had heard of seismic imaging. So we have this sensor nobody's heard of for an application nobody's heard of. So no matter how well you tell the story, smart investors aren't going to put money in something they don't understand, right?
Right.
Um, but despite the fact we didn't raise any money from these angel forums, we did still close $1.5 million from angel investors. And where that came from is it started off with some friends and family money. And then the investors we had, well, they would refer us to other investors. And so we slowly were able to just through word of mouth get the investor interest we needed. But it was very educational for me because we actually these network contacts took me all the way to a self-made billionaire that closed our round.
Wow.
But in my personal network, there aren't any self-made billionaires and nobody that's even close, right? So,
Right.
so this was somebody that was actually, let's see if I can remember the chain. So this was my mom's older brother, my uncle, his college roommate's wife. His wife, turns out she was a big shot in the in the financial sector. It was one of her contacts that was a self-made billionaire.
Oh, wow.
So yeah, so it was really interesting. I think everybody's network actually has that potential. You don't know
Right.
until you start going down the path. But I think
Seven
it was
degrees of separation, I guess, right?
yeah, exactly. And just that little branch, there's other people that were in that group there, but that was over a third of the round was just from that small group of
Wow.
people.
Yeah.
The smallest of which was my uncle. So he put in 15K, and he was part of over 500,000 of the $1.5 million round.
Wow. Awesome. So you raised that capital, and I'm guessing you started to get traction because this is right around the time cell phones, I think, started to include that technology too, right?
So we were very focused at the time. We didn't have a path for our technology to scale to consumer applications, and so we were focused on these high performance industrial applications.
Right.
Um, but if you think about it, so we closed around in July of 2008,
Okay.
and so that was a good time to close, right?
Right.
Because just a couple of months later, the bottom fell out, and
Yeah.
we were suddenly in really really bad times. But there's a couple things we had going in parallel. One, we had set up a competitive process to get. We knew we needed to get a strategic partner for this oil and gas application. We couldn't do it on our
Mhm.
own. So we had set up a a competitive bid process, and we got really lucky there because in the business plan competitions, one of the judges that we met, this was at Rice University, he ended up being very impressed by what we were doing after at first being very skeptical, but then becoming very impressed. And out of kindness, he offered to give a CEO level introduction to every major company in the space that we were looking to do business in.
Wow.
So yeah, try to can you, can you imagine, if you are writing a business plan and your plan is you're going to go meet somebody that's going to just randomly open all these doors for you. So
Right.
that was a situation where it was our plan to go do this, but we never would have been able to do it without the right network contacts.
Right. Right. Right.
So I will always be grateful to Dan. His name was Dan Piat. Um, but he didn't receive any. He was on the board of directors of some companies that prevented him from having any equity stake or financial involvement with
Mm.
Lumini, my company. So despite the fact that he was a key player, he didn't get compensated.
Wow.
Um, so what we did is we had set up this competitive bid process where we had, it was really nerve wracking, but went to these CEOs and said, we're selling, field of use exclusivity for our technology, and not equity. Who wants in? Um, During that same time period, we had applied for a Department of Energy grant that was a long shot. But we had been fortunate that an incubator that we had been part of in town had put us in touch with Lawrence Berkeley National Labs. And we partnered up with Lawrence Berkeley National Labs, submitted this long shot proposal. It got awarded at the end of August. And this is a $1.2 million grant on top of the $1.5 million we had just raised. So our budget, we only needed $1.5 million, and now we have an extra $1.2 million.
Right.
So the downturn of the economy was happening, and everything was going on sale, and we had extra cash. So
Wow.
it was this was a lot of good luck happening here. But then this competitive bid process, I mean, if you think of what happened at the end of 2008, the oil industry was going in the toilet, right?
Yeah.
And the credit markets were frozen. It was just a really bad time.
Right.
But this was very educational for me as to how powerful a competitive process can be, because despite the fact that all of these things were happening, we ended up with a $2 million contract with one of these companies after it just finished its second round of layoffs. Um,
Wow.
so now we have a strategic partner. That contract actually didn't get inked until early February, but here we are in the downturn of the economy with now an extra $2 million and a strategic partner, in addition to the extra 1.2 that we had from this grant. And so, so we were really we went from, we couldn't get a single angel investor to give us a dime, right? And then and really being stressed out, about friends and family being the only support mechanism, and then realizing that, wait a minute, we're actually going to be able to close this round, to then having 3.2 extra $1 million in the bank, in
Right.
addition to
And
the
this is
million.
all while the world was essentially falling apart around you, right?
That's right.
Wow. Incredible.
Yeah.
So that obviously amazing success story. So tell me the end result. So I think you exited probably in the 2013, 2014 range, right?
That's
What
right. So we
happened?
exited in 2014,
Yeah.
by that point we had pivoted over to consumer, because we had found a way to move our technology into the consumer space.
Yep.
Which was good, because the oil and gas industry and all the other industrial markets, they were all they were all on the decline, very difficult time. So there was no
Yeah.
money for us there. I mean, it was going to come back, but not in the time frame we needed it to. So we made our pivot over to consumer, and then it took about a year to put this together, but we laid the
Mhm.
groundwork to get ourselves into a competitive bid process there. And so now we are, what we did is we spent a lot of time networking up to decision maker level within about a dozen different companies that were either in the space that would want to make and sell our technology, or someone that would want to add, that'd be a key user of this technology. So there's
Right.
different categories. Um, but yeah, we had to have it be a competitive process because there were aspects of our Navy license that would require, I guess you could say, a level of understanding by the acquirer. Limitations like we had to, the license was only valid if you were a U.S. owned company, and
Mm,
so this limits the number of players you can talk to, and it
right.
also means that if they were to change their headquarters, even if it's just for tax reasons, right? I mean, you have companies, you think of them as U.S. companies, but their headquarters are in the Cayman Islands or some other place.
Yep. Yeah.
So those weren't eligible to be, to acquire us. And
Right.
so the competitive process is how we're able to really create a forcing function where people are looking for solutions of how they could make it work, rather than just identifying all the problems of why it wouldn't.
Right.
And so it worked. We were surprised with Google. We made the announcement to everyone that we were talking to in June that we're going to do this competitive process. Google was not one of the companies that wasn't even one of the companies we even thought of to talk to. We had no contacts there. The former CEO of our oil and gas partner, he had retired, was at a social function, meets Brian McClendon, who's was famous for Google Earth, tells him about what we're doing. Brian makes he tells someone else about us and has them check us out. The engineer that was in charge of us, her name was Vidya, and she'll always be my favorite Googler because of this, but she just was on it. And so she led the investigation. So our first meeting was in July, and we had a term sheet by mid-August.
Wow.
And part of that was because we had told that was our timeline. We told everybody, we announced in June, we want MOUs in July and term sheets in August, and that's what we're doing. And when Google wants to move fast, they can really move fast.
Yeah, that's incredible. Yeah, that kind of getting a term sheet in a month from a company as big as Google, I thought would be impossible, but that's
Me
incredible that
too.
you achieved that.
Yeah, we almost didn't take the Google meeting because we saw it as too highly likely to be a waste of time.
Right.
Uh, and you're feeling really busy, but then it's like, wait a minute, you're going to turn down a call with Google? Like, no, you can't do that. I mean, just to say you had a meeting with Google was
Right.
worth it, right? So,
Right.
um, yeah, so yeah, we gladly went and met with Google.
Fantastic. Fantastic. So let's fast forward a little bit. You had a great exit. You sold the company to Google, and are essentially consulting with them. But now, few years later, you're starting your own initiatives with Launch Factory. And so, tell me a little bit about that transition and starting Launch Factory as your own initiative.
Yeah, so as I think you probably picked up from the Luminine story, yes, I played a role, but there's a lot of things that happened along the way that were completely, you know, out of my control, and the result of the contributions of somebody else, and in ways that were, in ways that if you were to remove, like if you were to take Dan out of the equation, or if you remove Bob from the equation, the one that introduced us to Google, the
Right.
story wouldn't, it could have, we may have just failed, right? And those aren't the only examples. So there's a lot of those examples, and so so here I really had these ambitions to get back in the startup world, but when I'm replaying the Luminine story in my mind, I'm realizing, like this yeah, it's a lot bigger than what I can bring to the table if you want to be successful. So how do we create a structure where that becomes more of a repeatable process rather than good luck along the way?
Right.
Um, and so that's where the whole notion of Launch Factory came from, because you start looking at what causes startup companies to fail. And in hindsight, it should have been more intuitive for me, but you go look at the data and, startup companies fail for business reasons. It's actually quite rare that they fail because the engineering didn't pan out or the technology didn't work. It's usually for some business reason. And these are business causes that start all the way from the very beginning, because a lot of times your passionate founders, they don't look before they leap. They just assume everybody's going to love their product. They don't do that upfront due diligence work. So with Launch Factory, we wanted to create a model to where we can repeatedly build great startup companies. And for us, that meant we have to go all the way to the very beginning, to the idea before you even have a team in place. Yep. And build it up that way. And then another part of what you have to do is you realize that the company and its success is going to be a lot more than just the founders. So you need to have a team in place, a team of advisors, not just with significant network outreach, where we're all motivated to make sure these companies are successful. And so by doing that, we're seeking to replicate what I was able to, in many cases, just get lucky to have with Lumidigm, because, randomly meeting a judge at a business plan competition, that's not a repeatable plan.
Right.
Creating a core group of people that have network contacts and can be looking for these kinds of solutions, that is a repeatable plan. And we can pick the businesses that we pursue based off the strength of our team. So we can go in the strengths that our team has, yep, rather than having a company and then looking for the strengths.
That's so smart. Focus on the network first and then build up from there, instead of going the other way, having an idea and then trying to find a network that can support that. So that's brilliant and great way to start a business. So that brings us to Launch Factory, and that was the main reason why I wanted to have this conversation, because most people, when they envision a angel investor, they're essentially thinking someone with a big checkbook who goes around looking for startups and CEOs and randomly writes checks. In your case, your approach to angel investing is the exact opposite, right? You study the industry, you, I guess, narrow down to an idea. So I want to talk a little bit more about this process, and then hire the co-founders, essentially the CEOs, for that idea. And now you're putting up your own money and backing that. So you're starting with an investment and bringing in the CEOs to essentially execute on that idea. Is that more or less right?
No, that's good. Yeah, that's correct. Yep, that's right.
Okay. So tell me a little bit more about that process. How do you actually decide on you've said that your network essentially helps you guide what kind of industry you want to explore, but then how do you focus in on a business idea, and what does the process actually look like to hire the co-founders or the CEOs for that idea?
So for the ideas, we have one of our team members internally, Alessandro Rinaldi. He's the one that's the architect for how we do our ideation and our due diligence. We use the due diligence to largely be how we do our down select. So we have some very strict criteria, for any business for us to pursue. We look at, what is its potential? Is it something that we think investors will put money in? Because if you can't check that box, then we won't pursue it. It needs to be something that we are convinced can scale, and it needs to be something that we are convinced that we have adequate access to domain expertise to make sure that we are drawing the right conclusions. But what Alessandro has done, so he's a Stanford MBA, former entrepreneur himself, with a couple of 2 successful exits under his belt. But he's taken the process at Stanford and on this, how you analyze ideas and how you do this due diligence, and he's tailored it to be something that we can implement here at Launch Factory. And so it's a lot of work, but you get high quality results when you're done. Right. And so he sources the ideas from a few channels. So one is we have our own internal ideation process where he looks at things from a couple different angles. One of them being, if you have a solution, well, go verify that there's really a problem for that solution. And if you have if you identify a market that has a problem, go see if you can find solutions. And so you approach it from both angles. There's a lot of steps in between, but it's all meant to, as soon as you can remove an idea from consideration, you do so that you spend most of your time focusing on the ones you want to move forward with. So, but he also spends quite a bit of time sourcing ideas from technology transfer, from universities, government labs, which I have a lot of comfort there since that's my background. but it's one of these things that as Launch Factory, we're looking for companies that can achieve a fundable milestone within a 2-year time horizon.
Mhm.
So that means that some of these things you see at universities, it could be great technology, but if there's still 4 years of R&D left,
Right.
before you get to that milestone, then we're going to pass on it. Um,
Mhm.
but that's what he does. So it's and he's not just him alone. We have a great team that works with him, but he's the one that's really architected this, and we love what he's done. Um, when it comes to the founders, we're very vocal here at Launch Factory that the founders are the most important thing for us to get right.
Yeah.
And of course you'll see, I think most people in investment startup world would agree with this. You can give a really great founder, you can give them a mediocre idea and they'll fix it, right?
Yeah.
You give a mediocre founder a great idea and they'll find a way to break it. So uh, um, so we firmly believe that. And at the same time, while we have all this, we know what the business is that we want to create, and we have all this due diligence behind it. We also know that founders need to have the flexibility to implement things their way, right?
Mhm.
Because the way I might pursue a certain business might be different than how you would pursue it. But if you try to do it my way, or if I try to do it your way, it may not work due to individual
Right.
skill sets, right? So,
Right. Right. Right.
so what we do is we present our ideas at a high level, right? So there's still lots of, what the business concept is, but there's still lots of different ways you could take it.
Yeah.
And we put out an open call for people that think that, that want to pursue this. And we have some upfront things they need to do. So there's some about 45 minutes worth of tests they take that assign, that give assessments on some of the abilities they may have. So you can think of like a personality tests, and we have a lot of data that correlate. There's a specific metrics that we look for that correlate to performance in the workplace, and we look for those. You got to take all these test results with some salt, though, because nothing's perfect. But we use that to just down select to the people that we want to actually have enter our process. At
Right.
that point, we like to look for co-founders. So we have people partner up and we assist in that. But ultimately, it's up to them to find their co-founder, and we put them through a process where each week we ask people to demonstrate their vision on our business idea, right? And so that's the go-to-market strategy. It's the financial projections. It's the product description itself. We want to see how they think about this business. And each week we do a down select until we get down to 3 pairs of founders per business, and then we bring in outside judges to make the final selection. And so it ends up being a pitch of their vision for this business. And this last time, we started off with 222 applicants for 2 businesses, so 4 positions. And the judges we brought in, we had a judge from Kesheff Ventures, several judges from CoFund in Orange County, and representation from Tech Coast Angels. And the judges were tremendous. They did you put people in front of real check writers, right? And you see the kind of questions. I mean, these guys have seen thousands of pitches, and the types of questions they ask are very insightful. And so it was really, really good. And it was, by the time we were done, we had a lot of confidence that not only did we pick founders that are going to do a good job, we picked founders that are very well prepared,
Mm.
and we're really excited about them.
Fantastic. Fantastic. So many good lessons to learn in that, the last answer. It's incredible how much sort of thought you've put into this process. And by the way, if you're a entrepreneur, someone who wants to start a company but don't have an idea, you need to get in touch with Brad. So you can be the next co-founder for his idea. But so many lessons as far as, you're essentially doing your due diligence upfront before you essentially commit to one CEO or one co-founder and their team, right? So, yeah, I mean, this is sort of a new paradigm of investing. Uh, I have so many things rolling around in my head, but tell me more about sort of how this worked. You've been doing this for about 2 years. So last year in 2019, you funded one company. In 2020, I think you're funding 2, and 2021, the goal is to fund 4 companies. I think 4, right?
That's right. 4
Okay.
companies.
So tell me what that process has looked like. You've already funded 3 so far, and you're getting ready to fund 4. Um, how is this process working, and how you, the first company, you're already more than a year into that process. What are the types of results you're seeing? Tell me more about the whole process.
Yeah, so it's been very validating. Rupak Doshi is the CEO of OmniSync, our first company,
Yep.
and he's very well suited for the role. So he's come in and he's just, if you look at what he and Norman, his co-founder, have done with the business, it's everything that we wanted, right? So they started, we started with them. Their first day was literally Labor Day, so they started beginning of September last year. So they're not
Oh,
quite a
wow.
year old,
Okay.
uh, but they recognized their first revenue in March. So they not only did they get a first product up and running, it's a very early version of it. They call it their pre-MVP, but it functions and handles customers just fine. So they were able to recognize their first revenue in March. And when you think about what was happening in March, getting any revenue
That's right.
was
Yeah.
hard, and especially getting first revenue. So they've been able to do that. We've been able to attract some really high quality advisors to advise them, and that goes to this brain trust and network contacts that I was fortunate to be able to get access to at Luminine, that we want to create for our own companies. But so they have their core advisors in place. They have a product where they've already generated revenue, and they are ready for this fall. They're going to have what they call their true MVP ready, where they can really start to scale the number of customers. But by having this pre-MVP version, what they've been able to do is do some experiments with pricing models, engage with real customers, and really understand the marketplace. We do all this upfront due diligence, but our view on due diligence, especially when you're looking at the customer side, is that it's a perpetual thing. You never stop,
Hmm.
right? You're always needing to learn more about your market, your customers. How do you make it even better than it currently is? And that's one area where these guys have really been tremendous, because they spend a lot of time talking to the customers, looking at things from different angles and seeing how they can make their offering even better. So they're off to a really good start, and we're very excited to see where they take things. The other 2 companies just started in June, and so
Right.
the first thing we do before we do any, I guess you could say, real work, we 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 do a ground up, start from the ground, build up a plan. Now, of course, Launch Factory has its view and due diligence on what the business plan should be. The founders have already put theirs together and presented it and everything else. But the very beginning is about the only time you're going to have any quiet moment to really reflect and think. And so both of the companies are just finishing up that process, where they're going back and just doing a double check to make sure that we're really moving in the right direction.
Right.
And when you do that, now you can move forward really, really fast without second guessing, and with a much reduced risk of needing to do a short change directions. Because if you can run in a straight line, you'll get a lot farther than if you're hopping around trying to change things all the time. And so that's the environment we try to create, where our companies have the luxury of being able to do that. But yeah, so what we're going to see over the next few months is when we're going to start rolling out or implementing the plans that these founders put together.
Hmm.
And so it's going to be really exciting Q4 for us.
That's fantastic. So, just so we're clear on the structure, you're actually investing, seeding these companies, which pays for a modest salary for the co-founders for the first little bit, and you're essentially giving them that runway, that 18 months to 24 months that you talked about, to really do what they need to do. It might be develop the software, get their MVP ready, and then they actually have to go out and find investors into that company. So tell me a little bit about what that looks like. How much money are you seeding, if you feel comfortable sharing numbers? How much salary the founders get to take initially while they're still developing the product? What the lifestyle is like? I want to get a little sense of what their life is like.
Yeah, no, that's important. Yeah, so we put so they so we put 300,000 seed capital into their bank account, and so there's actually a lot more money that goes into the companies than $300,000. Because we cover legal expenses. They office space. They don't pay for office supplies. So there's a lot of overhead expenses. Plus, they don't have to. There's no like we're paying for all the due diligence and all that kind of stuff. So the total money in is much greater than 300,000. But 300,000 is what they have full discretion on. It's in their bank account. The only limitation we put on it is to cap the amount used for salaries over the first 2 years, or whenever they go get outside funding, to $200,000. So that ends up, if you do the math, that breaks out to $50,000 a person, which, in San Diego, you can definitely get by on that. You're not living large, but you compare that to what most founders have to do. Like, for instance, when Lumidyne days, I went 3 years without a salary.
Right.
And I was just fortunate that I was able to, because I had, if you think of the housing boom that was happening in 2000, first half, mid 2000s, all these condos going up in San Diego. I flipped a few properties, made some money. But I stopped all of it when I went and did Lumidyne. And then the housing market tanked after it. So it looks like I timed the market perfectly, but the reality is I just got lucky.
Right.
So I was in a position where, and plus the business plan competition winnings, where I could go without a salary.
Right.
But we wanted to make sure the founders can take some salary, because our view is, why limit ourselves to people who happen to be, have some sort of independent wealth? What we really want are the best CEOs we can get.
Right.
And so, but at the same time, there is something to being a starving entrepreneur, right? So if you're given you almost need to have that situation where it's a little bit uncomfortable at the beginning, so that as you progress and things get better, then your situation grows with the company, and anyway, it's part of the the scrappiness that you need to have out of entrepreneurs, that
Right.
I think is a good thing. But yeah, so that's what we do. So we also ask that the budget we ask people to put together is make $300,000 last 2 years and get to your fundable milestone in time, that you can go raise that outside money.
Right.
So because they will need to go do it now. We do get involved with helping out. So with our network contacts, we try really hard to create a situation where they know who the investor groups are out there, and we try to make sure that they're well positioned, in terms of what these groups want to see before we go ring the doorbell. So it ends up, the objective is to make it much more efficient for them than it would be for a traditional company.
Yeah.
It's still a lot of work, but it's a good milestone for a company need to go through. If you can't convince other people to invest in your business, then you need to go back and rethink about your business.
Yeah.
And so making sure, and you don't truly know if this is the case until you get out there and actually do it. And so,
Right. Right. No, you're absolutely right that, there are so many businesses that may be good, but really the investors, from their perspective, they'll never invest in it. It might be because it's a lifestyle business, or it might be the market is too small, or, there are 100 reasons why it's not an investable business. So to have that view up front and make sure that you're actually building something that the investors can get behind, I think is extremely smart. And I think, so the calculation was $50,000 per person per year. So 2 years is about 200,000. That's the salary piece, and then the 100,000 is essentially if they need to hire someone or develop software or any of those other resources they need to bring into the company.
exactly,
But I think
yeah.
$50,000 a year, I think, is a definitely livable salary. Obviously you're not going to have the penthouse, overseeing or overseeing the ocean or something, but you can, you're not worried about food or transportation or anything like that. So your basic necessities are definitely taken care of. But you're right in that they do stay hungry and want to achieve more, right? Because everyone wants that 75, 100,000, 200,000 salary, not just be stuck at 50,000. So I think that's extremely smart. Tell me a little bit about how the equity sort of breaks out. between the founders, because you obviously want to give them the incentive to build up the company. You've obviously done a lot of work. You're giving them office space, investing 300,000. So you should probably retain some equity also. So tell me how that sort of breakdown works.
Yeah, and this is an important one. This is also where, we're not the only startup studio, but this is where you start seeing a lot of divergence in startup studio models, right? So we are very much on the generous side for founders relative to a lot of other startup studios, because our founders take 2/3 of the equity and Launch Factory retains 1/3, and that's after the money. That's not before the money. So so there's, and we look at it as, you know what, we're going to be equal co-founders on this. They're doing, the founders come in and they're going to be doing all the work and all the labor going forward with our support and backing. But they, we came in with a lot of the due diligence and the cash and the other things we're bringing in. So it makes sense for us just to be equal partners in this. We also want to create a situation where, they don't lose. I mean, if the company does well, they need to benefit significantly financially, from their equity. That's, and so we wouldn't want to create a situation where it's somehow their success benefits us more than it benefits them. So being equal in this makes a lot of sense. A lot of startup studios are not equal. The startup studio owns a much higher percentage.
Right.
So we do this. But what we do at the same time, if you look at who really owns our equity, when I say our, you mean Launch Factories? Well, it's Launch Factories investors. So Launch Factories investors own it, and if you look at the math and all this of what they actually get, they're able to get in to these really exciting companies at a much lower price per share than you could get as a traditional angel investor. And of course, a lot of people that get involved with us, what are their notion is, okay, well, I'll get in early in these companies. Then they get first look when they come out to participate again as an investor. So it's a way of doing things that way. But when you get in this early, the whole the whole notion of trying to get a 10x return in your portfolio, that suddenly becomes a realistic possibility.
Yeah.
Because you can get a 10x return in your portfolio, and you don't need to have companies exit for $1 billion or $500 million. You can get it off of exits that are much more reasonable.
Right.
And so it's a very investor friendly model, but in a way that goes and directly benefits the founders themselves, because they're being in a situation, they start off with a company that's already capitalized, already has a lot of things behind it. But then the other thing that we do is Launch Factory, from the investor side, we take a 20% carry. So borrowed that from the VC model. But what we do with that carry, the bulk of that gets distributed to our advisors. So the people that come and work with Launch Factory to help us out, to help our companies out, they're helping create this value. And so it makes sense that they participate in the upside.
Right. And this way the advisors they're available on day one, and that the co-founders are essentially getting that benefit also. So you're really creating a infrastructure where everyone is benefiting as soon as, on day one of the company.
That's the whole idea. We want to have everybody aligned in the same direction. I mean, it's to the degree that, like if you look at how, like me personally, how I would make money at Launch Factory, I don't take a salary here, right? So I make money at Launch Factory by being an investor into Launch Factory, not by a salary or anything else that I'm taking. So it's the whole idea is that, it's a very investor friendly model that's specifically designed to benefit the founders. And increase the odds of these companies succeeding.
Which is exactly what we look for also, right? As angel investors, if a traditional angel investor, I should say. But so tell me a little bit more about what kind of people you look for as investors coming into into Launch Factory, because it's not the traditional fund model. We can use that, semantics, but essentially you're taking in all of these investors for the startups that are, in essentially your incubator. Again, another just sort of vocabulary, but tell me more about who you want to take into that group, who you want sort of sharing in this investment with you guys.
Yeah, so this is our first time. This for 2021 and beyond is the first time we're taking outside investors, and so we're going through that process now, and it's going pretty well. But if you look at the type that are joining us and the types that we are that we want to have join us, these are people that look at being an investor as, in many ways, as joining as a co-founder in a way, right? So you think about it, if you're part of the formation of that company, then when you invest in Launch Factory, you're really part of the formation of all the companies that we created in that year.
Yep.
So you're a co-founder in that respect, and you're going to get a lot more visibility into these companies than you would investing by other means, because of our larger equity stake. Then we, as Launch Factory, retain board seats, and we'll retain those for a while. And of course, everything that we see, well, then our investors get to see.
Right.
So we're looking for people that like this idea of being on the forefront of something new and being informed, right? That they're participating. And then of course there's we see our investors as part of the network that can benefit these companies in the future. So they can benefit by either, participating as investors in the next rounds, or providing introductions, or maybe they have industry expertise that can, where they can provide network contacts, whatever the case. But the point being that this investor network ends up becoming something that actually goes and benefits our portfolio companies, in addition to the advisor networks that we have.
Right. So you're not just looking for money, you're looking for essentially that network again, right? You want people who are willing to support these startups, or willing to participate in the process and help the company grows as time goes on, right?
Yeah, that's right. That's right.
Okay. That's beautiful. And so again, another ask, if there are any angels or investors out there with checkbooks and don't really know the best way to deploy that capital, Brad can probably help you out in that regard. So
yes, I will be able to help you out in that regard.
Fantastic. So I think this is great, and it's so interesting as far as what you're trying to do with the new companies that you're setting up. Do you want to hint on what you're looking forward to in 2021? Or I think you have a big announcement coming up soon, so I'm not going to push you too hard, but tell us when we can expect it, how we can learn more.
Yeah, so we'll be announcing 2 of the 4 companies. So 4 for next year. We'll be announcing 2 of those in September, and then the second 2 in October. We take our due diligence very, very seriously, so we don't want to unveil too early. So we want to make sure everything, all the I's are dotted and T's are crossed. But those are, for us, when we cross that line and we can say this is what we're doing next year, it's a big deal here internally. It's the only thing that's a bigger deal is when we select the founders for the companies. And so we're really looking forward to this. And yeah, for the people that are investors, they get to be the first ones to know.
Fantastic. Okay. So, 1, they can sign up to be an investor, but 2, if not by September. So this is coming out by late August. So within the next couple of weeks, check your website to learn more about those companies that are going to launch in 2021.
That's right. And
Fantastic.
For those that are interested in being founders, look out for those companies, because if you see one that you really like, then let us know, because we're looking for quality founders for each one of these businesses.
Absolutely. And we'll have some of your information, your website, everything listed below. So just scroll down, click on the links below, and you'll be able to connect with Brad and all the information he's putting out. So Brad, I always want to end these interviews with an action item. So here's the last question for you. And I know you have a different approach to this, so the answer might be slightly different. But what is one thing an entrepreneur can do to get an investment, to get started, right? Growing their companies or taking their companies to the next level? What's one action item that you could suggest to the entrepreneurs?
So some of this is, depends on the audience you're talking to, right? The mindset of the investor. But what I would tell, just generically speaking, when you're talking to an investor, particularly if you really want to get a sophisticated investor, make sure your story goes all the way to the end, right? So you're not just trying to build something big and special. You want to build something big and special for which the investor gets an exit in the future. And
Yes.
If you can connect the dots where you can say, and this is the path we're going to take, and this is how we're going to do it. If you can, and I don't, and I mean, make it real. It not something where you say, well, Amazon's going to acquire my business because they'll find it really exciting. It needs to be a little bit more concrete than that, right? Like, why do you think Amazon's going to be excited? And don't limit it to just them, but show us how you're going to position. And if you can walk in with some established relationships that give credibility to that story, now I think you're going to get a lot more. You'll be taken a lot more seriously by the investor audience, because they can see that you aren't just thinking about this current round. You're already planning for the final round where the investors get to have their exit.
That's so good. So good. And I think one thing I might add to that, if you don't mind, is some sort of a time frame, right? Because a lot of investors come in and they'll say, okay, I want to raise $1 million so I can get to the next 18 or 24 months. But what does that exit look like, right? The exit is 5 years from now, 7 years from now. And by then the valuation will be 3x, 5x, 7x, whatever it is. Give us a time frame, just as a guidepost. And obviously things are going to change. You could say 5 years, but it might end up being 7. But that's such a good sort of thing to start out with, right? Know your end goal, and then you can sort of plan out that journey so much better. And so that's a fantastic advice. That see the journey through.
And I agree with you. The time frame, by being able to articulate the time frame and make it believable, meaning that clearly you've thought of the steps. What you're really doing is also cementing the fact that you've thought about this plan and you know how to carry it out.
Yep.
I think I like the fact that you brought up the time element, because I completely agree.
Fantastic. And I love the interview. Thank you so much for coming on. We're already running out of time, so I have to cut this short, but I love talking to you. Every time we get on the phone, I feel like I could talk to you for hours. But thank you for sharing your wisdom and your unique approach to investing. So many lessons we can learn from you. So thank you for sharing that knowledge and coming on today.
Yeah, well, thanks for having me. It's been great to be here.
Fantastic. All right. Talk soon. Bye.
Okay. Bye.
That was fantastic. Thank you so much for coming on today, Brad. And I really appreciate all the time that you took to do the interview. Once again, for everyone who wants to become part of the network, my email address is on screen. Click on that and we'll get you connected. And we talked about a bunch of new initiatives with Brad. If you want access to any of those, we have everything linked in the description below. So make sure you click on those links and get connected to Launch Factory. And last but not least, make sure you click the subscribe button to continue to get content like this every single day. We come out with episodes 5 days a week. So we want to make sure that you don't miss a single one. And if you click the subscribe button, we can make sure that we're always in your feed. With that, I'll wrap it up. Thank you again for your time, and I'll see you on Monday. Bye.